Ed Ponsi here, your FX educator here on behalf of FX Street once again. And time for our second session of the day here on Thursday. And we saw a little bit of dollar strength after those economic statistics that showed inflation picking up at the producer level just a little bit. The core producer price index a little bit stronger than expected. We saw Euro USD dip down to 118.40 before picking up a little bit, trading around 118.45 right now. You can see on the chart. Look at that thing dancing around 118.50, right on that line that we put in there. Coincidence? Yeah, probably. Right? Who we kidding? But what's next is always the question that matters in our world, right? Just taking a peek here. So the housing data out of Canada, not a big deal. Housing prices increased not very dramatically in Canada. Nothing to get excited about. Couple of FOMC speakers coming up in about an hour and a half. Again, nothing to get excited about. Draghi in an hour and a half. That's something we'll get excited about. If you're trading the euro, you're going to have to keep an eye on that. Draghi speaking in 1 hour and 25 minutes, right? And you can see the big red bar there indicating that that's serious business. 1 hour, 24 minutes from now. Crude oil inventories 1 hour and 54 minutes from now, right? That's definitely a big deal. Usually that comes out on every Wednesday, but Monday was a holiday in the U.S., Columbus Day, right, observed. So that pushes crude oil inventories back to Thursday instead of the usual Monday. And that's pretty much it for today as far as economic data. International Monetary Fund meeting starts tomorrow. Probably nothing to get too excited about. A lot of data out of China coming up while we're sleeping tonight. We'll get a lot of data out of China, and that could have an impact on our Aussie trade, right? Because data out of China has a big impact on Aussie, right? So Aussie has been in a little bit of a slump lately, and a lot of that is due to slumping data out of China. Hasn't been that impressive. Gold has been in a little bit of a slide, right? Commodities have been in a little bit of a slide, and all that is related to China. Okay, and also coming up tomorrow on Friday, all right, we're getting. So tomorrow's Friday the 13th, right? And tomorrow we'll get CPI out of Germany and out of a lot of European countries. Tomorrow we'll be getting CPI, Consumer Price Index, and we're getting CPI out of the U.S. tomorrow and retail sales out of the U.S. So a lot of data tomorrow coming up. Okay, that's pretty much it on the economic calendar. Right, so let's get back to the charts, and euro pushing back toward 118.50, so not such of a big deal from the little bit of data that we saw. Aussie, of course, our focus since we're in the trade now, and that that's still hanging right around the entry point, still hanging right around the moving average, which is where we got into the trade. All right, so let's let that one go. Let's take a quick roll call around the old futures pit. A new high yesterday for the S&P 500, but we've got a red open today. We've had plenty of red opens and green closes. They say amateurs create the open and professionals create the close. Well, lots of red opens and green closes on this chart, folks. What can I tell you? Lately, that's just been the way it is. Another all-time closing high yesterday, right? We got plenty of those. Let's look at gold, because gold's now a big deal, right? If you're in the Aussie trade, then you're thinking about gold, because Australia is a big gold producer, right? And here's gold. Gold inching higher, right? Inching higher out of this sort of channel, this bearish channel. Mild little gap up. It was at the top end of this bearish channel yesterday, and it seems to have gapped up out of the channel just a little bit. So if gold has a breakout here, that could mean trouble for us for the Aussie shorts like myself, who are sort of dependent on this channel. We want to see gold stay down a little bit here if we're short Aussie. All right, so gold popping out of the channel just a bit here, not a good thing for us, right? And the downtrend remains intact. It doesn't automatically mean that gold is going to head higher now. Sometimes gold will pop out of a channel or a trend and just go sideways. We really don't know. All right, so it doesn't automatically mean that it's going to go up or down or this or that is going to happen. So I wouldn't be too quick to say, okay, this is what's going to happen next, because it's not always that simple. Okay, we shouldn't be so quick to judge. All right. All right, let's get over to. I wanted to take a look at some of these crosses that we haven't checked lately. Remember the beast, the guppy? It's been a long time, right? British pound taking quite a beating today, and market sentiment turning a little bit ugly on British pound in general. Makes this kind of interesting. This is what we would call, let me get rid of this moving average here. This is what we would call a bear flag. Seems to be breaking down from this right now. How do we trade this? Let's zoom a little bit, try to make this a little bit more precise. There you go. Try to get this on board. There we go. A little bit better here. Try to include the wicks here. There we go. Okay, so a bear flag breakdown here out of pound yen, and this is also an engulfing candle. This red candle is what we call engulfing. The price went up and then down, and it's just eating these two candles right here. So, but it's also within a trend, trending downward now. And this can be very powerful because you had almost a gleefully powerful up move here, and now they're just getting it handed right back to them, the bulls. And the breakdown point seems to be right here. It's just under 148. Let's put a price on it. Call it 147.85. That would seem to be the line where the price breaks out of the flag is 147.85. Fair enough? Okay. As far as the flag pole, I'd consider that the entire move from here to here. It's roughly 400 pips. 151, just roughly, from here, 151 to here, 147, just roughly. You had a trend move, 151 to 147 is 400 pips. And then we pulled back up to here. That's 400. That's a measured move of 400. Then we come back up to here. That's approximately 149. Take 400 from 149. That gives you your target. Your target here is 145. This is your ultimate target on your measured move. I'll make that blue. I'll make this green. Actually, this doesn't have to be green. This doesn't have to be the entry point. This is just the breakdown point. 145 does not have to itself be the target because you don't have to shoot for the very end. In other words, 145 doesn't have to be the target. It's just the end. It's the end of the playing field. The playing field ends at 145. The playing field begins at 147.85. 147.85 does not have to be the entry, but that's where the playing field begins. 145 does not have to be the target, but that's where the playing field ends. What we've done is we've just defined the playing field for this setup. We haven't defined the entry and the exit. We've defined the playing field. Within that playing field, we will define an entry and an exit or exits. So what I like to do is let's look at the size of this playing field. This playing field is 285 pips. Fair enough. The playing field has a size of 285 pips. Close to 300. I'll round this to 300 for the sake of simplicity. So 30 below will become my entry, and 30 above becomes my stop. What's 30 below 147.85? It's 147.55. This will become my entry. And now 30 above will become my stop. 147.85 plus 30 is 148 plus 5 is 148.15. Now that I've defined my entry and my stop, I can get rid of that number, 147.85. All that does is, again, defines the beginning of the playing field. I've got an entry and a stop. Now we said 145 even does not define the target, it defines the end of the playing field. Putting my target at the far end of the playing field doesn't always make sense. I might want to make it a little bit easier to hit my target. Again, I'll use 10% of the playing field. The playing field is 285 pips. I'm going to round 10% of that is 28.5 pips. I'm going to round that up to 30 pips. Instead of 145, I'm going to make this 145.30 for a target. And in addition to that, I can have a one-to-one target. What would a one-to-one target be? Well, here's 147.55. And my stop is 60 pips up. So the question is, what would be 60 pips down? 60 pips down would be 146.95. Now let's think about this for a second. Am I really going to put a target at 146.95? Am I really going to put it just a few pips past a round number? No way, ladies and gents. I'm going to put it, I could put it on the round number because prices very often hit round numbers and then reverse. So my target might be, my first target is probably going to be right on 147. Now, the current price, does everybody understand that? I would never put a target just past a round number. Why? Because it's very common for prices to hit a round number and then reverse. So putting my target just past a round number really doesn't make any sense. On the other hand, putting my stop just past a round number would make a lot of sense. And my stop is just past a round number, just past 148. I'm fine with that, but there's no way I'm putting a target just beyond a round number. So this means that my initial target is going to be slightly less than 1-to-1. However, I would never, ever place a trade or recommend placing a trade that was 1-to-1 or less than 1-to-1. My actual target is 225 pips versus a risk of 60, and that is about 3.5 to 1. So I have a target of slightly less than 1 to 1 and a target of slightly better than 3.5 to 1 on this setup. Now, the current price or exchange rate of British pound Japanese yen is 61, 147.61. So we're not in this trade, and that's fine. It needs to come down again to get us in. And what we're hoping for is, and what this really is saying is, the bears are in control. The bulls tried to make a move. The bears smacked them down. So we're riding with the bears now. We're with the team that is stronger here. The yen. The yen team is the strong team. We're long the yen. We're short the pound here. And I realize, yeah, this is still a lot of contention in these pairs. But you can't run and hide forever from these things. And if you want to avoid the pound, I understand. But we've got our stop in place. We're not going to risk more than 2% of the account on any one trade. Certainly, a speech could come along and tank this thing on us. But it could very much work in our favor as well. So the sentiment, I say the sentiment's in our favor right now. I'm going with this. I just need to make it to 147. I'm going to take half of the money off the table at 147 and then bring the stop to break even. So at that point, I'll be very happy, if I can just get that to happen. Okay. All right. That's my pound yen setup. So at least I'm avoiding the euro, but I'm sort of hopping on the pound short bandwagon here and sort of crossing my fingers here that the market still wants to stay bearish on the pound, at least for a little bit longer, and avoiding the whole euro, completely for the moment. Okay. Just 2 targets and never risking more than 2% on any one trade. Definitely going to move the stop if the first target is hit. First target is 55 pips below the entry. And let's see what happens. That should be interesting. I like it because it's a trend reversal. These type of situations, you see how much this went up? A lot of people must have gotten drawn into this. This is the way I'm looking at it. A lot of people must have got drawn into this long position and just the feeling that, gosh, it's okay to buy British pounds and, the coast is clear type of feeling. And then suddenly that rug of security gets pulled out from under you, and it goes the other way. That's a really bad feeling, and it creates a real negative feel. And I think that's what we're looking at here. Okay. All right. All right, let's move on from that. We'll take a look at a few of the other yen pairs while we're at this, but really it's all about pound yen from my perspective. Of course, we're in Aussie already, so Aussie yen would not be on our menu because we're already in Aussie, but there's pound yen. Uh, Aussie yen not really trending very cleanly. Um, But you can see that Aussie is falling against yen, pound is falling against yen, so yen can't be that bad, right? Remember dollar yen? We said dollar yen was trending, but it was flattening out, but it was trending within the context of support and resistance, and you can see that that trend fizzled out, right? The support and resistance is, sorry about that. That's the opening bell for the New York Stock Exchange. Um, the um, the support and resistance is stronger than the trend, and the trend just fizzled on dollar yen. Interesting thing is that the stock market continues to make new highs while the yen is apparently gathering a bit of strength here. That seems to be an anomaly. Euro yen, euro is doing pretty good against the yen, I have to admit. It's hanging in there quite nicely. Can't really argue that point, right? New Zealand yen, not much here to trade. This is just a lot of nothing, right? It's up, down, up, down. I'm not, if there's something here, I'm not really seeing it. Canada yen, decent trend. Canada's holding its own against Japanese yen. You could definitely get rid of this trend line. You could definitely put a trend line in here. It's a shorter term trend line, but it's pretty steep. Steep trend lines are usually fairly easy to break, but it's telling you that there's a definite preference here of Canada above yen. But again, they do break pretty easily. The steeper the trend line, the easier it is to break usually. So I don't like to bet on those, so to speak. Swiss yen. Perfectly flat almost here. Really just drifting to the right. You can see what looks like it's trying to form a head and shoulders, but upon further review, there's no big run up into this. So just remember that everything is defined by what precedes it. If you don't have a big run up into a head and shoulders, then it's really not a head and shoulders. You need to run up into it. Otherwise, it's fairly meaningless. It doesn't really mean anything. Okay, all right. That's going to catch us up for today. So we've got a nice setup for the flag pattern on pound yen. A little bit of trying to catch a little bit of that momentum, the tail end of that momentum there on pound yen. And that's going to do it for today and then for the week. So I hope everybody has a fantastic rest of your week and a good weekend. And I will see you next week. So until then, everybody have a fantastic day. I'll speak to you again very soon. This is Ed Ponsi on behalf of FX Street. Thanks again for listening.